Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is 5:11 in the a.m. Eastern Standard Time. We're getting started a little bit late today, and let me say happy Thanksgiving to everyone, just in case I log off and forget to say that. This is going to be a quiet remainder of the week for the most part. You never know, though, but for the most part, given the holiday week here in the States, Thanksgiving on Thursday, most people are going to be off on Friday. I'm not sure whether or not that's an abbreviated day. Yeah, that's Black Friday. It has to be abbreviated. It's an American holiday, one would think. Oh, where is it? Yeah, they're closing early at 1 p.m. on Friday. And that's pretty typical. All right. Today, economic data coming out. Consumer confidence at 10 a.m. Eastern Standard Time. We have a couple of Fed heads out as well. Case-Shiller, national home price year over year. They've been strong of late. And on Wednesday, tomorrow, which is for all intents and purposes the end of the week, we have a lot of economic data coming out. We have initial jobless claims, which we get each week. Very important number. Traditionally, that number was hovering at around 200,000 or so pre-pandemic. Now they're expecting 720,000. Later on in the morning, we're going to have durable goods orders. Then the final read of consumer sentiment for November. And, of course, on Thursday, closed, and Friday, nothing happening here. There'll probably be a push into next week for any economic data that would have come out on Friday. Let's get to the charts. All right, so what we're looking at here is the pre-market, or are the pre-market futures action 4-hour charts. And the first chart I have up here is silver. Now, this is not a pretty chart, and I suspect that we're going to see lower lows here. And I hope that we do, because I'm looking to buy more. We have a small position. We've been looking to add more, and I think the market's going to present us that opportunity within the next several days. But we need one final washout here. Let's take a look at the U.S. dollar. Then we'll segue over and into gold. We're down on silver about just shy of a percentage point at current. This is the U.S. dollar index. Now, it's frankly surprising to me that silver is so weak, yet the dollar is on the precipice of a major break here. I mean, the dollar was able to flash a reversal bar yesterday. Let's take a quick peek at a one-day chart. We reversed yesterday. We were lower. We closed up higher. One might argue that if you draw your trend line down, here's your attempted breakout. Here's a lower band of resistance. One might argue that what we're doing is that we're retesting, similar to what we did yesterday. We were down in the pre-market, then we managed to close up positive. So did we break out yesterday on a daily time frame? Are we pulling back this morning? and retesting that breakout point. And if we do successfully retest, do we move up higher? I don't personally think so, but that doesn't make it so. So what we'll do is we'll sit, watch, wait, and see what the market has to say. Now, if we fail to hold 92.19 on the dollar index, then that puts into sight the lows of yesterday at around 92. If that breaks, 91.75, which means that we would take out the lows of November, and that puts into sight the high 80 mark last seen back in 2018 on the dollar index. Why am I spending so much time on the dollar? It's inflationary, number one. Number two, commodities are traded in U.S. dollars by and large. And if you see a break in the U.S. dollar, you should see a rally in silver, oil. Oil has been rallying. Silver has not responded to the weaker U.S. dollar of late. Gold, which we'll bring up now, is down another $17, nearly a percentage point, shrugging off dollar weakness. But I will point out, folks, get ready. This is a 4-hour chart. We have RSI on a 4-hour time frame at 17.61. Can it go lower? Yes, but this is unsustainable. This is going to see a rally soon. If I had to place a price target on it, if the dollar remains weak, I think we're going up to $18.50 the ounce. That was support. It will now act as resistance. Moving on to equities. The S&P 500 up nearly 0.75 of a percentage point. You can see on this 4-hour chart, we are flirting with a breakout to new higher highs. We're not there yet. We're stalling at resistance. Last tick was 36.01.75. So it's a holiday week. I had a one-to-one coaching session last night with a gentleman over in, this was our second one, in the Netherlands, and he was unfamiliar with the Thanksgiving holiday here in the United States. And I showed him an overlay of the DAX. He trades the DAX and the Euronext exchange. And I showed him the correlation between the Dow Jones Industrial Average, which we'll bring up right now, and the DAX exchange. And it's pretty much tick for tick, and that he might expect, might expect a rally higher today, given the seasonality effect here in the United States during a holiday week. And we're up nearly a percentage point here this morning on the Dow Jones. So seasonality still very strong here. I'm not a big believer in triple tops, but we are certainly setting up for a potential for a triple top here on the Dow. There's our resistance level at or around right at 30,000. Let's just round it up by a bit. 30,000. That's our resistance mark. By the end of the year, they're going to take it there. That's my bet. Now, if we roll over, this is our lower band of support. I'll give you a number in a moment, those listening on the podcast. At around 29,125 on the Dow Jones. That's support, critical support. The NASDAQ 100, we continue to lag here. I mean, you had the Dow Jones up nearly 0.75 of a percentage point. You have the S&P 500 up about the same. Yet the NASDAQ 100's up just shy of 1/3 of a percentage point. Take note of your RSI. You know, you wouldn't expect it to be breaking out, given that price has just been very, very lethargic. But it doesn't give me the warm and fuzzies that we're trading down below the 50 mark on RSI. We may be setting up here for a higher low on the RSI. Watch for a breakout. Actually, we already kind of do have a breakout. Let's modify this a bit. Again, these are 4-hour charts for those just checking in. All right, so you can see here, for those watching on video, that what we did was we made an effort on the 23rd, yesterday, to break out, which we did. What did we do yet again? We rolled over and failed to hold support on a 4-hour time frame. Would I go shorting on this observation? Well, we already do have a hedge on, and we're short of the NASDAQ 100, but I wouldn't go leaning into the short side. Now, I'm complacent right now with having a hedge on my long positions, and I'm good there. It's right, given the seasonality. And seasonality, again, for those not familiar, typically this time of year into the new year favors bulls. Let's take a look at, what else do we want to take a look at? Let's take a look at nat gas, which has been very, very weak. This morning we're popping up high by about 3/4 of a percentage point. This matters because energy really took off yesterday. And I'm laying the blame, not that it's a bad thing, we're long of energy. I'm laying the blame for that rally in energy at the doorstep of a vaccine and a lot of talk coming out of the medical community now. I shouldn't say a lot of talk. Let's just say that it's chit-chat out of the medical community that they could have herd immunity by May 2021. And that really lit the fire under bulls. And I believe that assumes that the vaccine has been distributed by about 50% of the population by that point in time. Whether that's the globe or the U.S., I'm not quite sure. I'd ask you to fact check me on that to make sure I'm accurate. Oil up yet again by over a percentage point. This is speaking volumes to us. You know, you have the world locking down, yet you have nat gas, which is rallying, oil, which is rallying. You know, something's going on. And what we want to do is also take a look at copper. Dr. Copper is an indicator for what might be happening around the globe in terms of growth. And of late, it's been fairly strong. I haven't taken a look at it in a couple of days, so let me search it out here. I should have the symbol written down so I can refer to it. We're looking at the futures market for those listening on the podcast. Where is it? Let's bring it up. I don't want to tease it, not bring it up. Let's go to copper spot price. That's Cooper. I'll get it right eventually. Copper. Okay, so here's the spot price. Good morning, Paul. I mean, this is a daily chart. Down day. I do not believe this is real time. No, it is not. It is down day yesterday, but the trend is clearly up. Very strong chart. And we have a major breakout here. Or close to a major breakout, I should say. Let me modify that statement. Let's go to a monthly chart. We are, hey, Devin, good morning. My man. We're very close to a major breakout. This is not a monthly chart. Why is it not changing? There we go. We're close to highs last seen back in June of 2018. When I see this, verge of a breakout, you have to make the assumption that yields are doing something, and they should be going up. Let's bring that up. Weekly time frame of the 10-year. This is not live. This is not up to date. We'll go to a pre-market view of the 10-year Treasury bond. This is the Treasury yield weekly chart as of the close yesterday, being the 23rd, and we closed up on the 10-year. We gapped up on the week. We did not recapture support level, but strong price action on yield, meaning weak price action on bonds. So while we had a horrible, horrible price action last week on the 10-year, I'm worried that we could begin to move up higher. And that'll bode well for the banks of which we're long, which had a great day yesterday. Let's bring up the 10-year. Here we go. All right, so the 10-year is flat on the session, not doing much here. Yeah, Devin, we went over gold earlier. Let's bring it back up, see what it's doing. No shock here. We had a major break on gold, the miners, silver on Friday. Continuation move lower. Now we're down a full point. And it looks as though we're going to go lower. But keep in mind, 4-hour time frame, we have RSI at 17.26. So buyers are going to come in here at some point. We'll see a counter trend rally, especially if the dollar breaks. And the dollar is very, very weak this morning. So no sense in trying to catch a falling knife just yet. But in all probability, we're going to be in there buying up some gold miners at some point in time this week. Bitcoin. It just continues to be in fuego. We hit a high of 19,235 this morning. 19,235. We're back down with an 18 handle. But man, what a move. I have a couple of charts I need to get to from members, so I'm going to do those, and I'm going to log off. We're going to go over UVXY, FUTU. I don't know if I got played or if that was a real symbol. FU2U. That's Yancey. Let me see whether or not that's a real symbol. LOGI, LOGI, APPS. Let's do those. And I will say, everyone have a great day, but let's get to these first. UVXY. This is the VIX short-term pro shares. The VIX had a bearish day yesterday, and it looked as though the VIX is going to go lower. And given the price action on the S&P 500, they should be down as well. The VIX future should be down as well. Let's bring them up. If they're not, then that's a tell, and we need to be very careful with this market. Whenever we see VIX up, S&P 500 up, that does not bode well for stocks. Yeah, the VIX is down over 2%. And I think we're going lower here. My price target on the VIX is a 19 handle. We'll fill a gap that opened up way back when COVID struck. So I would avoid this at current. This is yesterday's price action, yes. We're very close. Let's use the automated trend lines. This is TrendSpider for those not familiar. Automated technical analysis, 50% off. Use the link below. Don't use my discount code this month. For the entire month of November, it's 50% off versus the normal 35%. So what we're looking for on UVXY is a breakout. I mean, I think we're going lower here. We barely held on to support yesterday. I think it breaks today. I wouldn't catch a falling knife here, especially this time of year. Let's take a quick look at a weekly chart. Again, barely holding on to support. I would avoid at current. It's good to see that we closed out the day yesterday at a support level we did not break, along with the S&P 500 moving up higher. Might we reverse off the lows of the day by the end of business? I would wait until then to make a decision on the UVXY. If we do, well, then maybe we want to reconsider getting long. If the S&P 500 flashes a bearish key reversal, you should expect the inverse on the UVXY, and it should move higher while the S&P 500 reverses and closes lower. Until that point in time, I wouldn't hope that happens. I would avoid it. Sometimes we have a tendency to hope when we should fear. FUTU Holdings. It is a real company. Yancey was not messing with me. Our monthly chart, very extended. That doesn't mean it can't go higher. It can. It's in fuego. Weekly chart. We closed out the past 2 weeks above the third standard deviation Bollinger Band. So far this week, we have a reversal bar. We opened higher. We're trading lower. This is only one trading day, though. A lot can happen here. All right, so this is the power of the automated trend lines, right? No trend lines. Why are we stopping here? Click of a button. Resistance. So beware. We have resistance above. And the other beware here is that seasonality going back 8 years. Let me see if we have more data here. No, only 8 years worth of data. And it certainly bucked the trend in November. But November, December, January, not seasonally favorable periods of time for Futu Holdings. But it is definitely in rally mode. You don't want to put all your eggs in one seasonality basket. Price and volume action matter most. Price action at current looks pretty darn good. Yes, we closed down yesterday, but I believe that it's the pause that refreshes. We could head up higher here. Logi. Logitech. Monthly chart. Under a bit of pressure this month. Down on the month. A lot of topping action on the monthly chart. Weekly chart. Lower highs and lower lows. No lower low this week. RSI is very weak. Seasonality going back 11 years. It's flat, neutral, November, December, but it really begins to pick up in earnest at the beginning of the year, January. You know, if you get a sell-off in December and you see a good support level get hit, let's see if we have a good support level. $72.88. If we happen to get down that low, really good support. And below that mark, 67.03. Those would make for attractive entry points for a counter trend rally into a seasonally strong January. Daily chart. We broke support yesterday. Again, using the automated trend lines. No trend line on. We broke support. So at current, we have to assume that in all probability we're going to move lower here, and that 77 mark looks like in all likelihood that's the next support level. So I don't see a compelling reason to buy here. APPS, Digital Turbine. Joseph, have a worthwhile day. Thank you. I happen to like that. That's t-shirt worthy, Joseph. APPS, Digital Turbine ripping. We have a new monthly high. Monster. Weekly chart. Oh, we're going higher here. It looks like we're going up higher. We broke out this week. In fact, they gapped it up, pulled back, retested the breakout point already. This is a very bullish chart. Very, very bullish. So if they manage to retest this, I would be interested in it. Or if we get a continuation breakout, for those on the podcast, I'm setting up a trade alert at a support level on APPS. We'll keep it active for a few days. Then I'm going to set up another one. I really like this chart. Here's your breakout on a daily time frame. And what we'll do here is this. Let me just throw up a heat map here. I doubt there's any data on top. No. All right. So what I'm going to do is I want to know when we break out to a new daily high. Don't mind the spelling. Let's go back and fix that. I'm OCD. It's got to be right. Okay. And we'll keep this active. I doubt this is going to need 5 days to do. We'll keep it active for 5 days anyway. So we have 2 alerts set up here on APPS. A pullback and a retest of support. That would be a buy trigger, assuming that we hold it. Tight stop loss right below. Then add on a breakout above 41.87 the share. And that's the play on APPS. Looks good. I think it's going up higher. We'll leave off with 3M. The heat maps just kicked in on 3M, and we saw a breakout yesterday. This is an industrial. The industrials have been a bit in fuego of late. We have a breakout. This is a monthly chart now. We have a breakout above resistance on a monthly time frame. This is a very, very seasonally favorable period of time to be long of 3M. November up 82% of the time. December up 70% of the time. That drops off a bit to 55% in January, but it picks right back up again in February. So this is like the sweet spot for 3M seasonally, with a bit of a respite in January. Now, when you pull up the analyst ratings, I could give a rat's you know what about what the analysts have to say about 3M. All I care about is the ratio. And that ratio is the number of holds and sells versus buys. And you have very, very few buys and a lot of sells and holds. And what I read into that is that you have a positive, the potential for positive headlines, meaning a lot of opportunity for upgrades to cross the wire, sending the shares up higher. So that's a catalyst. So the fact that in October, Morgan went down to a hold, or they reiterated, one of the two, and I don't know who Gordon Haskett is, but Credit Suisse back in September, they went to a buy. I could care less. Doesn't matter to me. All I care is the ratio, or are the ratio of holds and sells versus the buys. There's a lot of upside potential here given the number of holds and buys, or holds and sells that can go to a buy. Or they could stay to hold with a raise of a price target. It's not normally what you see, but positive headlines if they do that. Just take note of weekly chart. Again, I'm going to illustrate trend lines off, add them back on. Take a look at your overhead supply here. So you do have resistance above at 174 the share. Where did we close yesterday? We're right at it. We're right at resistance. Daily chart. RSI rising. I think that we're probably going to break out here. Let's bring it up on I have this saved. Let's bring it up on my saved annotated chart. Yeah, you can see we're pausing a little bit at resistance, last seen back in January of this year. Talk about seasonally strong. Look at this rally at the back half of 2019. Daily chart. Yeah, we saw a breakout yesterday. What you may get here is a pullback and a retest of the breakout point at 172.50. Otherwise, I think it's a good chart. You're just going to have to work through some resistance above. The Dow Jones is moving up higher in anticipation of an open economy by spring. So I think that 3M is probably going to move up higher. With that, folks, I'm going to say, everybody, please smash that like button. If I don't happen to speak to you before Thanksgiving, everybody have a really great time with your families. Be safe and have a profitable trading day. Be well.